Imagine being able to predict where the high or the low of the day will be created. This is what I'm going to be showing you today, only using two tools. After this video, you will have specific levels every day where you expect the high or the low of the day to be created on any asset. Make sure to like and share this video with your friends. Let's get into it. Now, let's first understand, why would you need this video? Why would you need to catch or know where the high of the day or the low of the day will be created at? So let's imagine that we have this price action. Price going up and down, going up and down, and then we went up, we started going lower. So knowing that, for example, using the method that I'm going to be showing you today, we know that this is a potential high of the day. What can we do with this? First of all, we can actually enter short from here. So that's the first thing. We're going to be taking entries from those potential highs or lows of the day. In this case, high of the day, we're expecting price to just continue lower, right? After showing our setup here. Now, also when it comes to take profit, so the same scenario here, we know that the high of the day is going to be here, and also predicting that the low of the day is going to be somewhere in here. Now, what we can do is take profits at this level, because we know that there is a potential reversal from this level. So it's good to take profits there. That's why we need this. We're going to be able to actually have an idea about the framework for the day, the bias for the day, and simply where to trade from and where to expect price to have reversal. Now, the tools that we're going to be using to identify or predict our high and low of the day, the first one is the central bank dealers range, which is also known as CBDR. Another thing is PD arrays. So you should be already aware of what a PD array is. PD arrays are fair value gaps, breaker blocks, order blocks, those arrays that are in a range that consists of premium and discount. Now, CBDR, on the other hand, it's a range going from 2 p.m. or 14 Eastern Standard Time to 8 p.m. or 20. In blue, I have this agent session starting at 20, going all the way to midnight. That's my agent session. Now, before it, 20 all the way to 14, which is 2 p.m. The high and the low, that's your CBDR. So this low going to this high. Now, using this as well as the PD arrays that are around this range and at specific levels, we're going to be using standard deviation. You should be already also aware of what a standard deviation is. So simply go to your fib settings and have those 1, 0, -1, -2, and then all the way to whatever, -5, -6. It doesn't really matter. Now, what we're going to be doing is taking this CBDR range, looking at the standard deviation and looking at PD arrays that are near those standard deviation levels. So this is my CBDR here, 14 all the way to 20. I'm going to take my fib from the low to the high in this case, because you could do the same to the lower side. But in this case, we're focusing on the upside because that's where I see price going to. Now we have -1 here, -2, -3. So this is 1, 2, 3 standard deviation. Now we ask ourselves, what do we have near the 1 standard deviation level? Now, before that, let's look at this CBDR range here. How many pips is it? It's about 10 pips, right? So as long as it's below 25 or 30 pips, not more than 35 pips, it's good because we want a consolidation CBDR, not a trending one. If it's trending, it's not really going to work. What do we have near those standard deviation levels? And this is by itself, it's a framework for the day. So for the whole day, you know where are your levels, where to look at, and where to expect the high or the low of the day to be created. So now what do we have near those levels? So near the 3 standard deviation, what do we have? An order block. Near the 2 standard deviation, we have this fair value gap, but then we have another expansion candle, leaving another fair value gap next to what? Between the 1 and 2. Now 50% between the 1 and 2 is also significant. So price could actually react from the 50% zone or in between. It's not going to be perfectly aligning with 1 or 2, those specific lines. It's more as an area or a zone other than a level. So we see we have this fair value gap here. And then what do we have here? Next to the 1 also, we have those equal highs. So we have an inducement here and then a fair value gap. And exactly that's where price actually reached above the 1, almost at the 1 standard deviation. That's where price actually reacted going to the lower side. That's where the high of the day was. You see, almost at the 1 standard deviation. Now using the same CBDR range, but now because we already caught the high of the day, you could have gone to lower time frame here to 1 minute, look for a change of state delivery, because we have a high probability, Asian sweep and also previous New York high in a fair value gap on the 1 hour. That's where you can look for a setup here in the lower time frame. That's not the objective of today's. It's only about catching the higher the low of the day. Now the same thing goes here. We're gonna take our CBDR, flip it to the other side because we already caught the high of the day. Now we could focus on the low of the day. We can also do that. So I'm gonna take my CBDR again from here to here. And what do we have? Now we have levels or standard deviations to the lower side. Now before this, I'm gonna take a look at those levels. So we have 1, 2, 3. I'm gonna ask myself those questions. What do we have at those levels? Any PD arrays that could be pushing price higher from here. So first of all, we have this low, a little bit above the 1 standard deviation. Below it here, we don't have anything. We actually have this low all the way here near the 4 standard deviation. That's a valid one because we have a fair value gap below it. Another one could be this fair value gap that has what? A low inside also. And this one, where is it? It's between 3 and 2. So it's almost at the middle of those 2 standard deviations levels. So this is also a significant one, also aligning with this old high. So overlapping and then an inducement in a fair value gap. That's a valid one. So those are the levels, one between 2 and 3 and 1 at 4. And let's take a look at what happened. Where did price actually react from? Even though it took this low, but then it went all the way to exactly 3 standard deviation right here, exactly where price reacted from. So it's giving you more confidence to enter this trade, telling you that now this is the low of the day. And then you see price started going higher and higher. Now the same thing we can apply on any CBDR, and we're going to see how it goes. Another example that we can look at is this one on Monday, CBDR from here all the way to 20. And let's take a look at the low, which is all the way here. And then the high of the range is all the way here. This one is actually still about 12 pips, 11 pips. So now we can see that price started to go in higher here. So I'm going to be looking for the high to be spotted here, right? I'm going to take my fib from the low of the range to the high of the range. Now, next to the 1 standard deviation, what do we have? We can see that actually we have this high to be taken. So this is a high that is a liquidity level. On the 2 standard deviation, what do we have? We actually have two consecutive fair value gaps. So this is a whole fair value gap on the higher time frame. And looking at this overlapping with the fair value gap, we can see that that's half the point between the two. So that's where we're expecting either here or the 3 standard deviation. Those are the levels actually from here to here. That's our zone to spot that high of the day. This is where the high of the day is going to be. Why? Because we now know that we have this range going lower with a fair value gap. Going lower, we also have this overlapping and this overlapping, and that's where price reacted. So you see, price went a little bit above the overlapping, but where did it react from? Exactly at the 2 standard deviation. You see, that's where the high of the day was created very nicely, very clearly. That's a confluence. Now we could have gone to the lower time frame, look for an entry from there. Again, that's not the goal of the video. The goal is to know where those highs and lows are going to be. Now, another example on euro dollar, and this one actually I've talked about yesterday, that this is the level that price is going to react from. Now it's all about PD arrays, but I also added the standard deviation in this case. So our CBDR is going to go from 14 to 20. This is the lowest point, and that's the highest point. In hindsight, we can see that the price is going up, so we can actually apply it to the upside from here to here. We can see that now, just regardless of what's happening here, the 1 standard deviation aligned with this high, right? So almost at this high, we can see that this is the middle of 1 and 2. That's the 1 standard deviation. However, next to it, we have this Asian low that has a fair value gap above. So this is now is a higher probability one, and it's almost near the 2 standard deviation. We have fair value gap here and a high, and there is a potential of price going above into that fair value gap, taking the high and then going lower. And that's what happened yesterday. So near the 2 standard deviation, you see exactly at the 2 standard deviation, that's where price created the high of the day, going lower. So looking at this on the lower time frame, price going to this 2 standard deviation after taking that high on the 5 minutes. This is an inverse fair value gap being created here. You could have entered here, or you could have entered on this change state delivery, or another fair value gap that is offered here. So all of those fair value gaps, you trust them. Why? Because you already know that this is potentially and a high probability to be a high of the day. So now any entry here, this fair value gap could have been entry, and all of those fair value gaps. You see another one, that could have been an entry and price started going lower. Why? Because now you know that this is your high of the day. This is how we actually spot the highs or lows of the day. Now, there is one thing that we can actually apply here, which is the economic calendar. So if we know that there is more high impact news in New York, for example, then we know that the high or the low of the day, maybe the low of the day if we're bullish, or the high of the day if we're bearish, because then we're going to be having the expansion. But there is a big probability that we could have the high or the low happening on New York because there's a high impact news. And you see that's how the high of the day was created here, or in the New York session at least. Now we could have gotten the low of the day on London to get an expansion later on New York. That's possible. But then high impact news are going to either create the high or the low of the day. One of them must be. You can also use the quarterly theory to only look for the high or the low of the day at the quarters of manipulation. So for example, you see here that price was going lower. Where was price creating the low of the day? You see, this is one theory. That's the manipulation time of London session all the way to 3. And that's where almost the price created the low of the day. At that time, at 3 a.m. or a little bit after, about 3:30 a.m. You see, that's where the low of the day was created. Now, again, the high of the day could be created at the same time here, or it could be the manipulation of New York, right? So this is where most of the time we're going to be having our Judah swing. So quarterly theory could be also used to find the higher the low of the day, but you really need CBDR as well as PD arrays. CBDR is a confluence, PD arrays are the main thing. That's it for today's video. Hopefully you guys like this video. Make sure to like and share this video with your friends. This is Mulham, and I'll see you in this video.